Now, in company earnings during its first quarter, Lesaka Technologies reported a net loss of 81 million rand. This as one-off transaction costs relating to the acquisition of Adumo weighed on the group. However, it's worth noting that the net loss has improved by 23%. Lincoln Mali, CEO of Lesaka Technologies Southern Africa, joins us with a greater perspective on the numbers. Thank you so much for your time, Lincoln. Just on a broad scale, I mean, just looking at the turnaround year, that was the last financial year. So now we are in the first quarter, with these results of the FY25 financial year. Would you say that you're in an elevated stage of the turnaround, or have you already entered a new growth phase?
Thanks, Nati. Thank you so much. We are definitely in a growth phase. These are pleasing results for us. The last time I was here with you, I spoke about our EBITDA guidance for the quarter and our revenue guidance for the quarter. I'm very pleased to say that we met that guidance at a revenue point of view and at an EBITDA point of view. And this is the 9th consecutive quarter where we've been able to meet our guidance. And so this is indicative of the growth phase that we find our business in. And so for us, these are very pleasing results. We've committed to do something to the market, and we've delivered on what we said we will do to the market.
And I mean, there are lots of metrics here that we can use, but your losses definitely have improved. Looking at the operating loss, though, I do understand that that was not going to be the case without those transaction costs from Adumo. So from an operating income point of view, would you say that you are on a sustainable path of generating income there?
Absolutely. If you think about where we were last year, we had an operating income of about 4.5 million rands. If you look at this year on year now, we are in the first quarter at 29 million rands of operating income. And that is why if you strip out the once-off transaction costs, then you get to the 300,000. But the trajectory is from 4.5 million rand to 29 million rand. Other pleasing results for us is that at an EBITDA level, we've grown our EBITDA by 12%, and we've introduced another new measure, which is around thinking about net revenue, so that we eliminate some of the anomalies that come from airtime sales. So that has grown by 16%. So overall, you're looking at a business that's grown its fundamental earnings positively to 43 million rands from a loss of 5 million rands. It's grown the fundamental earnings per share from a loss of 8 cents to a profit of 66 cents. And we've been able to restructure our balance sheet. Now we've strengthened our balance sheet. Our net debt to group EBITDA is now 2.6 times versus the 3.8 times that we had last year. So all of these indicators are telling you that there's growth, there's profitability, and we're able to have momentum in the underlying business.
Growth, what are you most encouraged by there, looking at your different focus areas, your different divisions?
I think the thing that excites me a lot is that the underlying volumes in both the consumer division and the merchant divisions are really showing nice growth. If I look at the consumer division, we've grown our customer base by 14% overall. We've grown our lending by 34%, and we've been able to grow our insurance by 30%. If you look at the merchant business, you're looking at growth in our supplier payments up 60%. That's really, really significant. We are looking at growth in our, VAS business growing at 10%, growth in our IMT growing at 18%. So all of these are telling you that the underlying businesses are doing well. And then when you look at the consumer business, its EBITDA has grown by 99% year on year. Its revenue has grown by 30%. On the merchant side, when you look at it face value in terms of revenue, it looks like our business was flat. But if you look at net revenue, that growth is 9%. If you look at EBITDA, the growth overall, if you remove the anomalies, the growth is 10%. So what pleases me is that both of our engines are doing well, and this is before we have Adumo numbers, which will start to reflect in the second quarter. So I'm very pleased that the organic growth story is coming through, and the inorganic story will start to reflect as well in the second quarter of this financial year.
Well, actually, on Adumo, I do understand that the transaction was closed after the reporting period. So, of course, you've said that it will reflect in the numbers for the second half of FY25. But also, I mean, just have you been able to gather its contribution of value to the merchant division in this short space of time?
Those numbers will start to reflect in the second quarter of the year. But what is pleasing is that we've been able to reaffirm our guidance to the market that our business will be able to produce revenue growth of 10 billion to 11 billion rands. We've also been able to affirm that we'll be able to deliver an EBITDA of the range between 900 million rands to 1 billion rands. And that is now with Adumo included, and that the overall growth we're reflecting is looking at something like 37% growth in that. And also, if you look at net revenue, we project that that will grow from 5.2 billion rand to 5.6 billion rand, which is a growth of about 35%. So it shows you what we had in the first quarter without Adumo, we've been able to show growth, and then we're starting to project to the end of the year with Adumo that will be able to show the market a growth of 37% when it comes to EBITDA. And we think that Adumo is going to play a very big role in our business. It also transforms our business because now we'll have 1.7 million active customers on the consumer side and about 122,000 merchants on the merchant side. And that tells us now that we will be a very significant player in the micro merchant segment and in the SME environment because of the Adumo acquisition that we've made.
Well, looking forward to seeing the meat and potatoes of those numbers for the second quarter of 2025 when you do release the results next. Thank you so much for your time and for your insights there, Lincoln. That was Lincoln Mali, CEO of Lesaka Technologies, Southern Africa.